all the way till, March of 2020, when the 10-year was at 50 basis points briefly. And that benefited all financial assets, all stocks, all bonds did extremely well in a declining rate environment. And COVID really kicked that over with all the money printing and stimulus. And I think we've now shifted the trend into an inflationary environment. And it's very hard to get out of one of those, as the 1970s proved. Paul Volcker had to take rates to 20% to get us out of that one. And he could do that because back then debt to GDP was 35%. Now it's 120. And so my big theme is that, the mathematics of the situation suggest that we've got too much debt. The debt claims are much larger than the underlying goods and services. And that typically, historically, leads to either some kind of a monetary reset, some kind of a collapse, like, the 29 and 30 depression, or, seriously high inflation, or some combination of all three of those. Very hard to know exactly what's going to happen because we really don't know what the government's going to do, what the policy moves are going to do. But what we do know is that if you grow the rate of debt in excess, printed a lot of money. And my book is titled The Big Print. There really have already been two big prints.
But I assume there's another one coming then.
And I believe there's another one coming. But the first one was 2008, and they printed $3 trillion. The second one was 2020, and they printed close to $5 trillion. So, and I think there's another one coming just because of the math of the situation. So that's kind of the introduction to the big picture. And what, the conclusion, therefore, just to tie it all up with a bow, is that as an investor, one wants to own things that the government can't print, because inflation is in our future, and the government can't print gold, and the government can't print Bitcoin. To write the book, Julia, is I was sitting around last spring with my wife. We were watching a political show, and I watched a bunch of people on both sides, blue and red, yelling at each other over stuff that was incredibly stupid. And I thought to myself, the underlying problem here is with the monetary system. The reason why things are so rough right now is because the money is broken and everybody is suffering badly from inflation, and that causes people to lash out on both sides. I mean, it used to be a much more civil country. I mean, don't get me wrong, politics has never been completely civil, but it's gotten particularly toxic here in the last 5 or 10 years. And I just thought, somebody's got to say this. Somebody's got to try to point out that if we fix this monetary system, a lot of these other problems are going to fix themselves. And I really do strongly believe that sound money is what brought America to its peak. I mean, I think peak America was 1946. I mean, after we won World War II, we were a moral country. We were the good guys. There was really just nothing wrong with this country. Not to say we hadn't done bad things. I mean, the Trail of Tears and the middle class, and the middle class in this country is suffering very, very badly. And the lower middle class is really suffering. And that's because their wages don't keep up with inflation. And yet the people at the top know how to game the system and get rich off inflation. And so I wrote the book to try and help people, to help them see at two levels. One, politically, so that when we get some sound money leaders coming forward in the future, people vote for them. But then also tactically, just, okay, yeah, the system's broken. These people are inflating your savings. They're making you suffer by not letting your wages go up as quickly as inflation goes up. You got to protect yourself. If you can save money, you've got to put it in things that are going to outperform inflation. And so, the first half of the book is kind of negative, to be frank, but I didn't mean it to be negative. I just meant it to be factual. And I feel like somebody had to tell the story, and I have the benefit of being 60 that allowed you to get rich at the expense of everybody else. And somebody had to say it. But like I say, I got a lot of nasty comments, a lot of angry stares, and a lot of negative feedback about having done that. But there were a few people who came up to me afterwards and said, man, that took us, that was right, and I'm glad you said it. So some people know.
Yeah, it was Geithner who said your comment was eye for an eye, Old Testament. Well, that's right, Old Testament.
Eye for an eye, yeah.
I don't know. I think it says something about you, like being willing to be like brave and say what probably is on the minds of a lot of others, but most people are like way too afraid to like stand up and say something.
Yeah, maybe. I don't know if it's bravery or stupidity, but
I don't know. I think we could use more of it.
I'm constructed. People who know me and know me well, I'm constructed in a certain way, and I just can't change. So I'm just going to keep on being the way I am, and it's been a real benefit for me in some parts of my life, and it's also been problematic for me in other parts of my life. But our system, because it tells you where and how much to invest, and where and how much you invest determines how much productivity you have. And the reason that capitalism has made people, much wealthier over the decades and centuries is that we continue to figure out how to do more with less. And we do that because when the interest rates are set correctly, and by trying to set them by committee. I mean, God himself couldn't select the right interest rate, just like God couldn't select the right price of a car or anything else. I mean, the marketplace determines things. It's the supply of savings against the demand for investments. That's the interest rate, and it should be set in the market. It's totally common sense. I mean, everyone knows. In fact, in the book, I talk a lot about Judy Shelton, who I really admire, and she talks about, she studied Russia very heavily, and the reason the Russian economy collapsed is because they had state pricing. The state set the price of things, and they always ended up with either a surplus or a shortage. So free market 1912, and I walk you all the way through the history. I mean, the Civil War, Lincoln created fiat by printing greenbacks. The Federal Reserve got created, which is a backstop to the banks, which allowed them to increase the money supply and and basically have a one-way bet where they would win in either case.
1913, yeah.
Yeah, 1913. I mean, the Depression, which was driven by Fed missteps. I mean, it's, going off the gold standard in 71, getting rid of Glass-Steagall in 99. I mean, I can just point to instance after instance. I mean, taking away the commodities futures regulation so that Enron could fail. And that's the other thing I really tried to do in the book. I mean, I just came back from a Bitcoin conference. It's great. I met a lot of young people that are Bitcoiners. They're so excited. And, a lot of them have read the book and they said, gee, thanks. Because, in 2008, I was in high school,
Mm-hmm.
I didn't know these facts. I didn't know that the wife of Morgan Stanley's president got a $200 million, loan. I mean, others have used the term as well. I mean, I think that
I've definitely heard the term, but I haven't heard it.
Yeah, so a
tied back to
bubble
the
generally
currency.
comes when an asset category, a lot of money flows into an asset category, gets way ahead of itself. And a couple of recent classic examples of the dot-com bubble, and I participated in that to a degree. I mean, internet was a huge development, and a lot of money flowed into it, and rightly so. I mean, the internet is obviously a big deal, but of course, it got way ahead of itself in 2000, and a lot of stupid ideas got pushed forward and didn't work. So that was a bubble. The housing bubble was another one. I mean, and it actually grew out of the crash of the internet bubble because Greenspan and others, they took the interest rate down to 1%. I remember Alan Greenspan going out and saying, you should take a home equity loan against your house. I mean, what an incredibly irresponsible thing for a central banker to say, but he did. Distorted everything. And what it led to was all these carry trades where people would borrow money and put it invest it in something that would yield, and they would get rich. And so, but what it also did was it inflated the value of all those purchases over and above, the value of the real money. And so what we've got is, what really has value, money represents a claim on goods and services, and goods and services are what have value. Money is just the medium that you use to buy it with. And when you create a ton of money like we have, the value of that money just goes down. And so you've kind of got an everything bubble. And, if you wanted to end the everything bubble, you'd have to stop the debt creation. But, everyone fears doing that and knows, the Federal Reserve knows that if they were really to do that in a meaningful way, we'd have a downturn that would look like the Depression. And of course, they're terrified of that. So, so right now, to Powell's credit, or he tried to, he means you're going to push the interest rate up. Higher interest rate. That means you can have a bigger deficit. That means you got to sell more debt. So that's the doom loop. And that's kind of the bigger picture of what's going on. And I don't really know how to get out of it. Without, the currency collapsing. That's the problem.
Okay, let me ask you this. Are we already seeing those signs then show up in the bond market?
We are.
I take it that's where you want to be paying attention to for the signals.
We are. So we just saw, and it came back in quite a bit recently because the Japanese obviously intervened, but we just saw the Japanese long bond, the JGB 40-year go up, the rate on that went up really substantially, very quickly. We saw it in Britain in 2022 when Liz Truss said she was going to increase expenses and cut taxes, and their bond market went up and she had to reverse her policies. We saw it in the U.S. in the fall of 23 when our rates went up over 5%, and the Fed immediately came out with 10 people saying, no, we're not going to keep raising the supports underneath the dollar until eventually in 71, Nixon locked out the very last one. And now the dollar has no backing. It's backed by the faith and credit of the federal government, which, how good do you think that is, given all the deficits they're running in their balance sheet? So, But sound money was always money which was scarce, which could not be just, printed out of thin air. Fiat money, the experiment started hundreds of thousands of years ago. The Chinese tried it, others have tried it. Fiat money was always by definition money that governments by fiat said, this has value, and I declare that it has value, and you will accept it. And, if it was done responsibly, if a government said, well, gold and silver, will be money, and they'll be we'll make coins. So one of those two outcomes is coming. We just don't know which. We don't know how it's going to unfold. It has a lot to do with the policies. I mean, Besant said he wants to, preside over the next Bretton Woods, and God knows, I hope he does. I hope he comes out and says we're going to do a reset. I mean, that's what really needs to happen. Roosevelt did it in the 30s. It helped a little bit. In 34, they got a nice bump out of the economy when he devalued the dollar by 70%. I mean, it was an evil and immoral act to steal from the gold holders, because he grabbed their gold and then he devalued the gold or the dollar. But it actually did help. And it's what needs to happen here. We need to devalue this debt because we can't pay it back. We just can't. It's going to be a painful step. But the way I talk about it in the book is like it's better to rip off the Band-Aid rather than just kind of pull it off slowly and suffer, this broken system for another 15, 20 years, And I think we're going to have to rip it off, because I think events are moving in a direction, and a lot of that boomer wealth is going to be devalued. And what what young people do have that boomers don't have is you got your whole life in front of you. You got a lot of energy, and we're going to have a great world on a go forward basis. And, AI and productivity, there's going to be a lot of great stuff happening that are going to, your lifestyles are going to get a lot better. Housing is not going to be as important to you probably as it was to us. I know it's not as important to my kids. They're more into experiences. I think the nice thing about I call you guys, and I don't know exactly your age, but
I'm a millennial, yeah. But
yeah.
I'm in my late 30s now, 37.
Right. So you guys are kind of the new hero generation, and
yeah, we are the heroes. Yeah.
You seem to be much more focused on, the overall good of society. I know my kids are much more focused on, whereas my generation was very much focused on, I want to get mine. I want to have a BMW, or whatever it might be. And it was amazing to watch the transition too, because they went from being, stop this war and protests and everything else to
like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.